Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which has just tested a quite strong historical supply and resistance area. In fact, from here, all this previous rejection to the downside was created. Again, here, the market tested its zone and started rejecting it to the downside. So in a situation like this, we could expect more bearish continuation to be created away from this zone. So on the monthly, everything seems quite bearish. Dropping down the weekly time frame, what do we see? Well, from a weekly standpoint, the first thing that we have to notice is that in creating this move to the upside, the market is also currently creating this W formation. And in general, after the creation of a W, what you would expect is for the market to create a potential rejection to the downside for the completion of the W formation at the neckline, which is the previous resistance turned support. So by looking at the market here on the weekly time frame, what I would expect is to see a bit more bullish price action, but then to see a rejection lower. So I would expect short-term bullish price action and then longer-term bearish continuation for the completion of this weekly W formation at the neckline. We can also notice that from a pattern standpoint, we have a very clear impulse to the downside and then this correction. Now, if we want to measure the Fibonacci retracements of this move to the upside, we have to take our Fibonacci from the high to the low of this impulse leg. And what we see here is that the market is about to enter the zone in between the 50% and 0.618 Fibonacci retracements. Now, this is a quite strong resistance level from a weekly standpoint that at that point, this market could potentially reject to the downside, which from a pattern standpoint, as we have just identified, since we have this W formation, we would already expect. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, first of all, we can see how the market at the moment seems to be in a bullish trend. In fact, it is currently creating higher highs and higher lows. So from here, if the market will continue higher, we would see exactly the move that we wanted to see from a weekly perspective. Because if from here we actually get a move higher, essentially we would have the creation of that W formation from a weekly perspective, which would be perfect because at that point, we would have the creation of that W, after which a move lower definitely seems possible, or at least seems possible with good probabilities. Now, if we go and see what we have when it comes to the commitment of traders to the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can see how with the last reports, net positions have been increasing quite a bit. We went from having minus 130.2k net positions all the way up to having minus 55.9k net positions. So we had a huge increase of the net positions, making the JPY stronger. And a strengthening JPY makes USDJPY weaker. So this means that if we will see the move higher and the creation of this W, at that point we could expect a potential rejection to the downside. So if we get the move higher and we continue to see institutional longing of the JPY inside of this zone, increasing the probabilities of this move lower, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect if we get this move to the upside is that if the market inside of this area would shift from an intraday bullish market to an intraday bearish market, at that point, I would expect, with good probabilities, a potential rejection to the downside for the completion of that W formation that we have from a weekly standpoint. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that you could think of. In fact, you have all my courses, so risk management and trading psychology course, the day trading course, swing trading course, the MQL4 programming course on automated trading. And you also have the possibility to gain access to all my software, so the COT data software, the trading station software. And if you continue to scroll down on the website, what you will see is that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.